Welcome to OutlookMoney.com. It's almost 6:30 and almost five and a half hours since Finance Minister Pranab Mukherjee finished his budget speech. And through the course of the day, we have been putting up video clips telling you about how the budget proposals would be impacting your financial life. Now, in this particular clip, we want to discuss what are the implications the budget proposals will have on two areas. First, home buying, and second, home loans. I have with me Pankaj Anup Topo, who is the associate editor of Outlook Money, and in the next couple of minutes, we're going to discuss the possible impact of budget proposals on home buying and home loans. So, Pankaj, in terms of home buying, in terms of real estate, what has the budget been like for a potential home buyer?
For a potential home buyer compared to last year, the budget has not too many things, but it has a few things. The most important being, since 2009, most of the residential projects which were launched, which were under construction or which were on paper, most of the things that were on paper were put on hold because of the global financial crisis, and most of the things which were on ground were either put on hold because of liquidity problems at the developer's end. Now, what the finance minister has done in this budget, he has said if the developer wants to have some amount of, or he wants to claim some amount of benefits from the profits that he makes through the sale of those units. Earlier, he had an outer limit of finishing those projects in 4 years. Now he's extended that thing to 5 years. So he's got 1 more year. What this will do is it will be in the interest of the developer now to complete the project on time, so that he can get the benefits which the finance minister has given in the budget. And what it will mean for the home buyer is, at the end of the day, he will be sure at least that the delivery of the projects, even if it's not on time, it happens well within 5 years. That's one of the things that we can expect. So that's basically the thing that he has done.
But apart from that, all these excise duty hikes on cement, steel, etc., would these push up the home prices, or they'll happen a little later?
To take effect, that will happen a little later. But the thing that's actually going to push up prices is the scarcity of land in urban areas. That is the one thing which will really push up prices, because demand was so-called tapered in most of 2009, even in 2010, except for a period from May to June quarter in 2009. That was a period when the demand actually went up. After that, when the developers realized that prices were going up, the demand was going up, what they did was they increased the prices, which led to a fall in demand. And 2009 also, the demand has more or less been pretty okay. It's nothing great about it right now.
So it's pretty much clear that unless these guys, we're talking about the developers, they come up with realistic pricing, realistic offerings, things are not going to be so good for the buyer, isn't it?
Yeah, that's very true. Especially in India, where it's a very price sensitive market. And until and unless a buyer is comfortable with the price that he can afford, he's not going to buy it, because those days are gone during the property boom when anything and everything used to sell. A point was reached during the boom when at one point the developer kept pushing the prices, and after a point there were no buyers at that price, which actually led to a fall in prices.
So unless they mend their ways, there's going to be problems.
Yeah, there are going to be problems.
What about home loans, Pankaj? I mean, we've had all these teaser loans and what have you last year. Now, it's pretty much clear that the interest rates will either remain where they are or possibly go up. Mohit in an earlier clip was talking about it. Now, in that event, what can the potential home buyer, home loan taker look at, and what should be the approach?
See, the first thing with regard to home loans is most of the teaser rate schemes that will come to an end by 31st of March this year. Even now, if somebody wants to go in for a teaser rate, there are only a few banks which will be offering the teaser rate schemes. So most of the private players which had offered teaser loans. There was a catch in that. For them was, at least you should take one part of the amount should be disbursed to them, which is not possible right now if somebody else applies for that. But the bigger factor which is going to affect home loans going forward is the concept of base rate coming in. If RBI has its way and if all the stakeholders also agree to it, if the base rate comes into effect, it will lead to more transparency, but what it will lead to is, in the present day when somebody goes and takes a home loan, the home loan is benchmarked to a particular rate, and that rate in most cases is the benchmark prime lending rate. It's primarily for PSU banks. In case of private banks, there are other benchmarks. Now what they do is they discount on the benchmark. So supposing the benchmark of a particular bank is 14%, and if the discounting is 4, the effective rate which a person services the loan is 10%. What the base rate does is a bank cannot lend below the base rate. What it will do, supposing the base rate of a particular bank A is 8%, on the base rate it will put in some amount of money, some amount provision for its profit, depending plus some amount of risk with the credit profile, credit profile. So that's going to impact the home loan market, especially and the buyer going forward. But as regards in the budget proposal, he's not done much. He's basically extended the scheme which was there in the last year, which was a 1% interest subvention.
So basically, what basically we are talking about, it's one of the impending RBI moves that might make a difference, but not the budget proposal.
The budget proposals will not make any impact for the simple reason being there's a catch to it. The home loan on which that subvention is going to be provided of 1% is only rupees 10 lakh, with the condition that a house should be costing 20 lakh. In small cities, this might be a good idea, but especially in urban areas, getting a house for 20 lakh is very, very minimal.
So possibly the only route through which people can gain is that the direct tax benefits that have been given, the slabs that have been widened. So that's pretty much it. So that therefore, as far as reality prices are concerned, or home search is concerned, it's not going to get any easier unless the developers mend their ways. In terms of home loan rates, they're not going to come down. However, things might get rationalized if RBI's new base rate sort of move policy comes into effect. So that's basically it as far as loans and
over here, and if the base rate comes into effect, then it's more important for a person to ensure that his credit profile is intact, because if the credit profile goes haywire, then a person might end up paying a higher rate on that same loan, or it may happen that the bank may not even give the loan to the person.
So that's basically it, and as far as loans and real estate is concerned, and I hope that this clip will be of use to you. Thank you.
Thank you.